Welcome to Rebank, your front row seat to the future of finance. Raghu Yarlagadda is the co-founder and CEO of FalconX, the leading institutional prime broker in the digital asset space. FalconX has been an incredible success story. In the past year alone, they've processed approximately $1 trillion worth of notional across spot and derivatives, and they're only growing. The company's success is likely to be accelerated further by the increasing regulatory clarity and political tailwinds the digital asset space is benefiting from today. FalconX has raised almost $500 million, most recently at an $8 billion valuation from incredible investors, including Accel, B Capital, GIC, Thoma Bravo, Tiger Global, Wellington Management, and more. We hope you enjoy today's conversation with Raghu Yarlagadda. Raghu, welcome to Rebank.
Thanks so much for having me, Will. It's always fun chatting with a fellow fintech entrepreneur.
Well, it's a pleasure to connect with you. You're something of a legend in this space. I think you've been building FalconX since maybe 2018, if I'm not wrong. And doing a number of other things before that. Maybe to dive right in, how would you describe the state of the institutional crypto market today? And also, is that a fair characterization of the space you guys are in?
Yeah, very much in the institutional side of crypto. But I'd be very disappointed if you're just an institutional crypto company in 2-3 years. Hopefully, all the technology that you and I are building will spill over into traditional assets. Because the 24/7 nature of it, the elasticity, and the composability of everything that we're doing renders really well for TradFi. But specific to where we are within the institutional market, Bitcoin ETF and the ETF approval in early part of 2024, that really changed, crypto for good. By that, what I mean is that was a moment where it was like a bipartisan, both sides of the aisle, regulatory push to ratify Bitcoin through the ETF wrapper. And that went on to become the most successful ETF debut ever. Now, what that did is it brought in regulatory clarity that a lot of people were looking in. And that further ratified the institutional adoption in the space. What I mean by that is in the last year or so, we did about $1 trillion of volume. And of the $1 trillion, if you look at the constitution, the world moved from spot markets. Now derivatives are a huge part of crypto. And 60 to 70% of all derivative activity, we believe, is institutional. So institutions are here, to summarize, because of the regulatory clarity, because of the nature of the asset being 24/7 and deploying the balance sheet 24/7, and the institutional grade infrastructure that we all built over the last 3 to 5 years.
Yeah, and that makes a lot of sense. So just to unpack some terminology, maybe for listeners, when we say institutional, what do we mean? Is this managers of Bitcoin ETFs who are coming to you to buy Bitcoin that ultimately gets wrapped and held by ETF holders? Is it hedge funds who are actively trading crypto on a day-to-day basis? What's the split of your business today?
Yeah, there is a very interesting insight in the last 6 months in the question that you asked, and I'll get to that in just a moment. When I say institutions, it's largely 4 major categories. You have hedge funds, prop shops. You have market makers. You have corporate treasuries, pipes. You have ETFs. And beyond these 4 categories, the 5th category is there are a lot of traditional banks, brokers, and fintechs that are trying to provide access to crypto to their end retail user base. So those are the 5 categories that we work with. We also work with sovereign funds and miners, and there's so many other personas, but largely these are the 5 personas. But one of the most powerful things that we've seen, Will, is if you look at the last bull cycle, around the 2021 mark, a lot of crypto trading was spot, and it was held on crypto native exchanges. But in this bull market, you saw a divergence where It's not just the early adopters trading crypto, but a lot of new people are coming and touching crypto, and the channels through which they're coming are radically different. Now we see 40% of the flow that's coming into crypto come through ETFs, more recently corporate treasuries and pipes, traditional banks, brokers, and fintechs. So the texture of this market is very different from the market that we've seen a few years back.
What percentage of your business is spot Bitcoin and ETH versus other assets?
So derivatives are now the largest portion of our business. Within the category of spot, it varies month to month, but Bitcoin plus ETH is about 40 to 60%, depending on where the altcoin interest is.
Interesting. No, that level of diversification is actually positive, right? I thought that maybe Bitcoin was 80% of trading volumes and ETH, maybe some negligible number too, and alts even less relevant than that. But it sounds like there's strong diversity, certainly on the spot side. And how about on the derivative side? Is it similar?
Derivatives, the altcoins are slightly higher, depending on where we are at the cycle. If there's a lot of excitement in the market, I think that spills over into making altcoins a slightly larger proportion. But I think if you look at the last 1.5 years, Bitcoin really became institutionalized. The type of people that are touching Bitcoin, we are one of the largest wholesalers for retail players also. So we see flows across retail and institutions, and we are on that information superhighway. Now, what is fascinating is from sovereign funds to potentially countries thinking about it, to the world's largest hedge funds, asset managers, and TradFi, prop shops, they're all touching Bitcoin in some form or shape. Most of the players are. So Bitcoin truly reached that escape velocity and beyond. Ethereum and other assets are also definitely there, getting there, but Bitcoin is in its league. Now, within that construct, if you look at what happened with corporate treasuries and pipes, first it started with Bitcoin, it spilled over to Ethereum, and now the pipes and corporate treasuries deals that we're seeing, a lot of people are thinking about Solana, XRP, and a bunch of the other assets, and they're putting traditional wrappers around this very conventional digital assets and taking them to market because there's a lot of appetite, not just from early adopters, but from new folks who want to touch crypto.
Right. When you guys started in, I think it was 2018, please correct me, what was your original thesis? What was missing in the market at that point in time? Like what gap were you stepping in to fill, and how has that evolved since then?
Yeah. My very first slide for my very first investor had 3 things. And all our investors laughed at the slide, every single one of them. The 3 points were, number 1, crypto will be a $1 trillion asset class, specifically powered by Bitcoin. At that point, Bitcoin was a $200 billion asset. Number 2, if crypto is a $1 trillion asset class, 60 to 70% of the volumes are going to be institutionalized. And thereby, institutions need institutional grade platform, not just retail grade platforms for bespoke trading, bespoke needs that they have. Number 3, if crypto is institutionalized, this technology is going to spill into traditional assets through tokenization. All 3 of those statements were such a big stretch statements that pretty much all of our investors laughed at it, but they had so much conviction in the team because of our prior lives that we built, I'm very proud of the cap table that we built. They all came in, but they didn't believe in the 3 points. And we went on to see, fortunately, crypto is now a $3 trillion asset class, 60 to 70% of it with institutions. Through stable coins, through private credit markets, now this technology is going mainstream. So what is FalconX within that context? We are an institutional brokerage that helps customers with trading, financing, and their infrastructure needs.
You mentioned tokenized assets, tokenized financial assets a couple times so far. Talk to me about your, current views on that space. Are you Are you seeing much activity there, much institutional interest? And what role do you think I guess call it tokenization of traditional finance will likely play in FalconX's future?
Yeah, that was the reason why I left Google to start FalconX. Well, I think beyond crypto, the first application of tokenization is stablecoins. What we saw is institutions are coming to this asset class that is active 24/7. But the banking system works only 20% or 40% of the time, depending on where you are in the world. So institutions need coverage for the nights and weekends, to rotate their balance sheet. And that's how stablecoins started getting adopted to crypto trading in a meaningful way. Now, when we started FalconX, stablecoins were $2-3 billion. Now it's about $200 billion and counting. So this is the first application of stablecoins. And we see not just stablecoins used for trading, but cross-border B2B payments. Our Forex desk grew 5 times compared to 2024 in 2025. Why? Because the pricing using crypto for Forex is probably slightly expensive than the traditional Forex rails, but the settlement modality is extremely fast. So that's the first proven application of tokenization is what I feel. Next, I think equities in traditional markets are already efficient. So my prediction is fixed income, private credit, and some of these aspects, some of these instruments are going to be tokenized sooner and will be used. So we're seeing that progression into private credit, fixed income, tail end of commodities, with some action on tokenized stocks as well.
Yeah. And I guess some of the regulatory clarity that we've seen, initially Genius and potentially a clarity or a market structure bill, not to mention some of the, language out of the SEC and CFTC around the way that crypto and digital assets will likely be regulated. I guess that will potentially accelerate the institutional participation in the tokenized financial assets space. What have you observed over the past few months? When we jumped on before starting to record, I think we both confirmed how hectic it's been lately, far from a relaxing summer. What's been going on in your world over the past few months?
Yeah, let's start with regulation first, and then we can build from that. The regulatory clarity that we're beginning to see, whether it's through Genius or Clarity, I would say 60% Clarity is going to be clearing probably this year, 40%, maybe it'll spill over to next year. But the power of ratifying stable coins and the power of creating market structure and clarity in the world's largest capital markets, I think it's extremely powerful. Because a lot of institutions, they look for clarity before they touch asset classes, because that's when their compliance, risk management teams, and allocation teams get comfortable if there is regulatory clarity on this asset class. So we're seeing that with ETFs, the floodgates unlocked into Bitcoin, and Bitcoin ETF, grew tremendously. Now with corporate treasuries and pipes, with the blessing on the SEC side, we're seeing a massive growth. I think with Clarity Bill, we'll see 2-3 times more growth than what we've seen in the last 1 year, because people do come to ETFs, touch Bitcoin, people do come to corporate treasuries, but quite a few investors, after touching these, they want to actually trade, touch Bitcoin directly, touch all these other crypto assets directly, because there are a lot of tangible benefits of directly having custody on these assets. You can also do a lot of bespoke trading if you touch them directly. So regulatory clarity is going to invite a lot more institutions than what we see. US taking the lead on it is going to kick off an arms race for other developed countries to basically unlock crypto and digital asset regulation. The third major insight is this is going to open floodgates both ways, meaning crypto is going to go mainstream and TradFi is also going to come into crypto.
Yeah. I was actually thinking about that as you were talking. And it seems to me like, in a sense, the question is, are crypto volumes, is the crypto market likely to grow via additional institutional participation as more regulatory clarity comes through? Or is additional regulatory clarity going to pave the way for crypto to basically evolve into a traditional finance, tokenized securities direction, which is going to end up kind of, I guess you could argue, merging crypto and TradFi, but potentially, I guess maybe the cynical view would be, well, there's a smaller speculative market, which is crypto-native crypto assets, and potentially the bigger quote-unquote opportunity is tokenizing the sector that represents 25% of global GDP, i.e. financial services. And surely it's not a binary outcome, right? It's not either one or the other. But I wonder how you think about those two potential trajectories and the impact they might have on your business.
I think what we're seeing with Bitcoin and some of the majors is a phenomena that is beyond speculative trading. If the world is going to continue to print a lot of money, and it's not a bad thing, because whenever we hit a crisis, if you don't print money, a lot of people are going to be suffering. But every crisis, if we continue to print money, digitally finite assets are going to be valuable. So from that standpoint, assets like Bitcoin and programmable assets like the Ethereum and the Solana, they have a role to play because they're deterministic, they're immutable, and they're truly global. Now, I believe in the next 5 to 10 years, 50 to 60% of all financial transactions will be touched by AI. Maybe 10, 20% will be controlled by AI. In a world of financial transactions where AI originates and controls the transaction, I want programmability, I want determinism, I want 24/7 systems. AI is not going to wait for your bank or a brokerage to open. So from that standpoint, crypto as an asset class, the number of use cases will increase and it'll actually continue to increase. Now, whether it becomes I see, based on the use cases, a path towards $7-8 trillion. More and more use cases are opening up. Depends on how viable some of these use cases are. It'll, whether it's a $7 trillion asset class or a $17 trillion asset class, these use cases determine. But the interesting thing is what happens when this technology spills over into traditional finance. Because the core attributes of what you and I are building, Bill, we built a system that can operationalize any asset class with 1/10 of the cost. It works 24/7. By the native principles, we are truly global because this asset class operates everywhere. And it is programmed. Now, those assets are powerful for any asset class. Equities, fixed income, commodities, or gold.
So we've touched on increasing regulatory clarity. And presumably that means more currently regulated firms entering this market in some form or another, whether it's institutional brokers, whether it's TradFi, prime brokers, whether it's banks, whether it's traditional broker-dealers. What impact is that likely to have on your business? I imagine that if I'm sitting in your shoes, regulatory clarity is great on the demand side because it means we're likely to get more institutional capital flowing into this space. And also on the competition side, it's potentially going to complicate things. Mm-hmm. I imagine you guys are far ahead in many ways in terms of the infrastructure that you built to trade and settle digital assets. But I also imagine there are probably at least a few firms that you would be wary of going head to head with should they go wholeheartedly into digital assets.
Yeah, I see this in two phases, Will. Phase one, with regulatory clarity, what happens is the cost of doing business will increase. And this happened in the early days of internet also, net neutrality and privacy acts. The world of internet consolidated to hyper large companies. The same thing is going to happen in phase one. Centralized crypto is going to consolidate into 7 to 9 companies worldwide. The big will become hyper big. And the growth is going to be phenomenal. Now, if you look at the traditional phase two, the TradFi banks, brokers would want to come in or use tokenization for their traditional assets and would want to come in all the explosion and growth that's happening in crypto. They have great brands. They have amazing balance sheets. The way I think about this is we have a good 18 to 30 months before traditional financial players come in. because they're much larger shops, because consolidation happened there too, they cannot move as quickly. They'll come in 18 to 24, 30 months. Even when they come in, some of the primitives that we take for granted, we were forced from day one as FalconX to work 24/7. We were forced from day one to settle transactions using a lot of technology. I'll give you an example. The $1 trillion that we moved over the last year or so, we moved that with 25 people in the back office. 25 people. The leading US bank, the most efficient leading US bank, needs 280 people to settle the same complexity. So what that means is my cost structure efficiency can lower the unit costs and I can compete. The classic disruptor. But the big banks will have brand and balance sheet that I don't have. So our strategy is, after this phase of hyper consolidation, then we partner with the top 7, 8, 9 banks saying that, hey, I mean, everything that you need in crypto, like, whether it's aggregating liquidity, settlements, financing, and underwriting risk, these are extremely complicated. I will give you everything that you need in a single API. Let's partner. Let's partner with the top 8, 9, 10 banks, and let's compete with the remaining 150. That's what happened in technology. And I think that's the same curve that's going to happen in, digital as well.
Yeah. That operational efficiency that you guys have, how much of that is because you're a, new, well-organized, well-run business without much legacy debt? And how much of it is that you're transacting in digital assets, which have some settlement advantages?
It's 60, 30, 10. 60%, it's because of tokenization. The shared ledger, which is immutable, that doesn't go down, is 60% of the advantage. 30%, tech DNA, and 10%, we're a smaller company. Right. I hope in 10 years, I'm not going to be as slow as some of the larger ones.
Oh, nice. Tell me about the recent announcement from the CFTC, the FTOB framework, which, as I understand it, effectively provides a path for non-US exchanges, crypto exchanges, to service US customers, which hadn't been possible in the past. And maybe through that, just tell us about the general dynamic that you guys have with centralized exchanges.
Yeah. I'll break that into 3 parts. One is this specific, recent announcement, Project Crypto from Chairman Atkins, and then centralized exchanges. On specific announcement, it's good to see. There's a lot of confusion around this, that now, US users can trade on foreign exchanges. I don't think that was the intent. It was very clear that now the foreign exchanges can register within the US. Foreign exchanges could technically register a year back also, but they made it almost impossible. Now, with CFTC coming and saying that we welcome foreign exchanges registering, I think that's powerful, because ultimately the customer benefits from competition. And the customer benefits from this global liquidity being available. That's very, very powerful. Now, the second thing, what was incredible is the chairman of one of the largest, most respected regulator in the world, SEC, Chair Atkins, came and said he's open to, or he envisions, every single security being on chain. So that takes it to a whole nother dimension of, it's not just crypto anymore. You and I we are going through a massive upgrade of the financial system here in the US over the next 3 to 5 years. We'll not like all of it, but most of it is going to be a tremendously positive change. So I think that's exciting from the perspective of regulatory clarity and improvements. Now, to the context of centralized exchanges, I think we are one of the largest on pretty much most of the centralized exchanges. You can guess the names. On Deribit, I think on Bitcoin, we're number 1. Paradigm, we're number 1. We trade with Binance and a whole bunch of exchanges. So the complementary relationship is, we provide institutional capabilities for customers, and we tap into the global liquidity of all these exchanges. The exchanges win because institutional flows are coming. We win because we are customizing a whole lot, right? Financing, settlement, bespoke derivatives that institutions need. We also work with regulators to make sure that we cater to the institutional regulatory requirements. So it's a win-win. But we also compete, on the fringes, right? The extremely large institutions want to go to the exchanges, they do, and we work with them bilaterally as well. So yeah, that's the relationship with centralized exchanges.
Yeah. Do you take principal risk in your trading activities?
So yes, and we take very, very small, very, very calibrated risk. For example, we take a very small portion of the balance sheet. And for products where customers are like, I want to face someone who's taking the other side of the trade. I simply don't want to work with an agent. In the case of options, that's true. What a lot of our customers told us is, I don't want to simply go through an agent. I want to actually see the other side of the trade and the thinking, rationalize the thinking, and then do trading. For very select instruments like that, we use our own balance sheet in a small percent of our balance sheet that's ratified by the risk committee and the board. And we do have principal operations there to create much deeper value to the customer.
Makes sense. So maybe to pull a few things together as we wrap up, we've talked about regulatory clarity leading to likely an expanding market, both in terms of market participants as well as assets. We've talked about this potentially shifting nature of the types of firms that will serve U.S. clients. And we've also talked about the potential trajectory toward applying some of the tokenization technology to traditional financial markets. How do you expect what is currently crypto market to converge with what are traditional financial markets over the next, say, 5 to 10 years? And how do you expect FalconX to kind of track to those evolutions?
That's an exciting question, Bill. I mean, seeing beyond 2 years in crypto is exceptionally hard, but I'll do my best there. Three things. Crypto will be much more institutionalized, and the infrastructure is going to be extremely robust. And why is that important? When FTX collapsed, that was a huge blow, and it took years for us to recover. Why? Because the risk is very verticalized, right? I mean, the exchange that is basically doing custody is also trading, is giving leverage, and it's also clearing. With things like market structure and the clarity bill coming in, I think risk management in the crypto stack will become much more robust. So crypto will be institutionalized more. Crypto will be much more robust, to what we've seen in the past. That's amazing. Now, TradFi will not only come into crypto and embrace, number two, but tokenization will spill and modernize traditional financial infrastructure in a meaningfully large way. Number three, AI is going to touch both crypto and finance in a very, very deep, interesting ways. Most of the financial transactions will be touched by AI in the next 5-10 years. We spoke about that. And that we're seeing a lot of data on, very early data on that. So I think digital assets, specifically crypto, renders better than most of the other assets in the traditional system to AI-centric world. So AI is going to morph these asset classes substantially and leverage the core primitives of digital assets like programmability, composability, 24/7 nature, truly global nature, much, much more deeply than human-centric trading.
Incredible. Well, it seems like you guys are extremely well positioned. What an insightful conversation. I really appreciate your time, Raghu.
Thank you so much, Will. It was truly a pleasure.
Raghu, thank you very much for joining us today.